Hello and welcome back to another Wall Street Petting Zoo Tour episode. This is our educational segment in which we teach you how to find out information about the market and how to use it for trading. This week we're going to be talking about how to follow the big options traders. Options, in case you don't remember from one of our first episodes, are an instrument that lets you basically place a bet that a stock is going to hit a particular target price by whatever expiration date that you set. This is a very high risk, but also a very high reward way to play the market because you have the potential to lose your entire investment. You will lose your entire investment if the stock doesn't hit your target by the date that you've set. But you can potentially make a lot of money. Option contracts are fairly cheap to buy, and you can make 300, 400, 500% if the stock moves in the right direction. And so you can make a lot of money fairly quickly on these option contracts. So the people who really know what they're doing, who have computer AI algorithms and so forth that are helping them pick stocks, that are using a lot of money, have large fortunes, and have made a career out of trading the market, many of them are trading options. A lot of the big institutions, for instance, are trading options. So typically, when you look at what options traders are doing, it can give you pretty good ideas about which stocks present good opportunities in the market. So in order to find out what the options traders are doing, I want you to go to barchart.com, right up here. And then once you've arrived at the website, you're going to open this options menu, and then you're going to go to change in open interest. And that will take you to this page here. Now, change in open interest is going to tell you how many new options contracts were open on a particular stock within the last session. So this is a little bit different from volume. Volume is going to tell you how many of the existing options contracts were bought and sold. Open interest is going to tell you about new option contracts. So open interest should tell you about stocks that are just beginning to turn a corner, stocks that are just beginning to get interest from big options traders. So you should be getting in fairly early on stocks if you use open interest as your metric. So I like to use open interest a lot more than I like to use volume in order to find out which stocks are hot right now, because I like to get in early on things. So I think open interest is the best metric to use here. Now, the next thing that you want to look at is the current price right here and the strike price right here. The strike price is going to tell you what the target price that the option traders are expecting the stock to hit is, and then you are going to compare that to the current price. So I only play the long side of the market. I don't play short. I don't buy options. If you are an options trader and you like to short the market, go ahead and feel free to use ones where the strike price is actually lower than the current price. But personally, I am looking for stocks where the strike price is higher than the current price, because that tells me option traders are expecting that stock to go up, right? Now, the next thing that I want to do once I've identified, so CVS here, the price is at 67.24. And they're expecting it to hit 100. That's a really nice jump. That's a big margin. So there's a lot of profit potential on CVS. So that tells me that's an interesting one to look at. The next thing that I want to do is check to see if anybody's betting against CVS, because sometimes you will see stocks where some people are betting on the stock to go up, but other people are betting on the stock to go down. And so the option interest doesn't actually tell you anything of interest. What you want to find is one where everybody's betting in one direction, because that tells you that there's a broad market consensus on which direction that stock is going to move. Okay. CVS, I'll tell you, I've already done this work, so I've already gone down this list. There's not a lot of open interest betting against CVS. In fact, I haven't seen any in this list. I didn't go through the whole list, but certainly, up here near the top of the list, I didn't find anybody betting against CVS. So there does seem to be a consensus. CVS is going to go up rather than down. So that's a great sign. That tells me that CVS is a fairly good bet, that option traders are broadly expecting this to go up. All right, the next thing that I want to look at is the expiration date. This is really important because some people are short-term traders, some people are medium-term traders, and some people are long-term traders. My friend Robert, who is not with me today, likes to trade long-term. He likes to trade things that are more than a year out because if you hold them for more than a year, then you get the tax benefits. I often prefer to trade shorter term. So this is definitely a long-term investment. This is an expiration date in January of 2021. So this is over a year out. So this would be a great thing for Robert to look at. If I wanted a shorter term play, I might look for something like this, CPRI. This is mid-November. So mid this month, basically two weeks away, they're expecting it to hit this $30 price. Now the strike price is below the current price, so that would be a short play. If you were an option trader, this would not be a long play, so this isn't something that I would play. But it's an example of, an expiration date that's much closer than the one that we looked at above. But let's go ahead and continue looking at CVS. Let's imagine that I am a long-term trader, which occasionally I do play the market long-term. Would I play CVS? Well, okay, so far, so good. It all looks great. But now I want to do some due diligence and see if I can figure out why option traders are expecting the stock to move a particular way, and do I agree with them? So I'd come over here to Fidelity, and right up here in the ticker box, I would type CVS, and then I would pull up the CVS page. Lots of great information on this page. We've talked about it before. You can see it's got an 8.8 out of 10 equity summary score, so that means that analysts are broadly bullish on this stock, which is a good sign. It's got a PE of 18, which is like fairly good. Somewhere in the range of 15 to 20 is fairly average for the market. So that, that's a decent valuation there. If it were expected to be a fast-growing company, sometimes the PEs can get up to like 200, which means you're paying a very high price for how much earnings it's getting. This is not priced as if it's going to be an extremely fast-growing company. So if for some reason I expected this company to blow up in the next year and a half, it would actually be very attractively valued because as the market prices that in, we may see this PE go up toward, like, say, 40. Coming down here, I can look at their earnings history, and I can see that in each of the last 8 quarters, they have beaten analyst expectations on their earnings report, which is a really great sign because that means that on earnings reports, they're generally going to go up after the earnings report rather than down. So for a long-term investment, that's a really positive sign. They've got a dividend, so if I'm going to hold this for a long term, it's going to pay me 3% or so over the course of the next year just for hanging on to the stock. So that's great for long-term investing. I can see the Recognia expects the sentiment, both short-term, medium-term, and long-term, to be very strong, so they're expecting the stock to do well. And over here, I get some fundamental analysis from S&P Global Market Intelligence. They're rating this highly undervalued on a scale from 0 to 100. They're rating this 96 undervalued. So that's really great, and it also has a very high quality, growth stability, and financial health score. So that's all really great. Now, I'd also want to do some additional research, and I will tell you a few things that you'd want to look for. I've already done this research. So one thing that you want to look for is how much cash do they have versus debt. CVS actually has a fairly large pile of debt. They've got about twice as much debt as the industry average. They do have an $8 billion cash reserve, which helps some. That gives them some padding, but they've got quite a bit of debt. Okay, they're above the safe level of debt. So if something major were to happen, like let's say they were to be subjected to a major lawsuit, that debt could be a huge liability for CVS and could put them in pretty significant financial trouble. So debt is a worrying factor for this company. You also want to look for lawsuits. Are they engaged in any major lawsuits? CVS does not appear to be engaged in any major lawsuits right now. And then the final thing that you want to look at is what is their sort of market plan. What new products are they releasing in the next year? Are they opening new locations, or are they closing locations? Are they cutting costs, or are they aggressively doing R&D? Companies that are actively researching, actively releasing new products, actively opening new locations, those are all good signs that that company may grow over the next year. And if you do your research on CVS, you will find that they're opening 1,500 new Health Hub stores. The Health Hub stores are AI driven. They're using AI to deliver diagnoses and treatments. So they're going to cut costs and potentially, deliver very low cost treatment compared to the broader healthcare market. So this could be a huge win for CVS. It could be industry disrupting. It could help lower healthcare costs in the United States as a whole. And it could really put CVS on the map, not only as a pharmacy provider, but as a healthcare provider. So it's a big move for CVS. They've already run a pilot program, and it was very successful in a few locations. They're opening 50 locations by the end of the year, and then by the end of 2021, they're expecting to have 1,500 locations open. So they've got a very aggressive expansion plan that could bring in a lot of earnings. They're also in the process of a merger with Aetna, and that also has a lot of potential profit for them. So CVS has a great growth plan, a great business plan, and indeed, over the next year or two, we could see big growth for CVS. One more thing that you want to look at is where are they in relation to, where is the stock price in relation to its history? And so if we come over to tradingview.com and pull up the CVS chart, we can look at the price history of CVS, and we can see that, in fact, CVS is relatively cheap now compared to where it was back in 2015. Its high was up around 112. And so certainly if their business plan pans out, we could easily see them come back up into close to their previous highs, around 100. So that the option traders bet that this is going to hit 100 by 2021. Certainly that is plausible enough. I could totally see that happening. Okay, so once I've done my due diligence and decided, okay, this actually looks like a really good investment, the final thing that I want to do is figure out my trading plan. I want to figure out how I'm going to enter the stock and how I'm going to exit the stock. So you can see I've drawn a little trend line here. It shows you how the price has performed over the past few years. Very long-term downtrend in CVS. One way that I could play this stock is as soon as this breaks above the trend line, that tells me that the momentum in the stock is changing and that that's a great time to enter. So I might want to buy in as soon as it hits this trend line. Another way to play this is to draw essentially a channel. So I could delete this trend line here, and one of the charting options here is a parallel channel. So I can redraw my trend line essentially, and then pull it down and end up with a channel like that. So that tells me sort of the range, and I could look to buy CVS toward the bottom of this range. So maybe it bounces off the top of the channel and comes back down. I could look to buy it down here and swing it back up. So that is a couple different ways that I could choose my entry point. And then I want to choose my exit point. Good exit points are levels at which the stock price has spent a lot of time. So I can see the $78 level here is showing up on my volume profile as a major volume node. That's going to be a hard resistance level. When the stock hits this price, it might bounce back down from that. And the reason that that is such a hard resistance price is because the stock price has spent a lot of time there, and so people have a lot of buy and sell orders located at that price. So that's a good target price for, let's say, a short to medium term play on CVS. If I want to go longer term, I might set my exit price somewhere up here around $100, or I might simply decide to, instead of setting an exit price, I might set an exit date. So I might say in 2021, when those option traders have set their expiration date in January 2021, that's when I'm going to exit. Or I might say that I'm going to wait until the end of 2021 when they've got those 1,500 Health Hub stores opened up, and then whatever the stock price is at the end of 2021, that's when I'm going to exit, right? So there's a couple different ways to set your exit plan. Once you've developed your plan, once you've decided where you're going to enter and where you're going to exit, it's really important to stick to that plan. So don't go violating your plan. Don't get into what's called the fear of missing out. So sometimes, the stock price can shoot up 10% in a single day, and people will jump on board because they're afraid of missing out on big moves. And then the next day, the stock price will come plummeting right back down 10% again. So you've got to watch out for that fear of missing out. Make sure that you actually, once you've established a plan, you actually stick to your plan and trade your plan. Hey guys, thanks for watching my video on how to follow the big options traders and play the market based on options open interest. If you enjoyed this podcast and if you learned things that were useful to you, please give us a like, share, and comment on YouTube. You can also follow us on social media, Facebook or Twitter, using the links underneath the video. And we also have a referral link to sign up for Webull. If you don't already have a Webull account, give our referral link a click, and you get a free stock. We get a free stock once you deposit your first $100 in your Webull account, and that helps support the podcast. Thanks so much, and we'll be back again to tour the zoo next week.